What is going on, investors? Hopefully, you guys are doing well out there. That is right. It is Friday. We're right in the middle of earnings season, and I couldn't be more excited to be here for the Fang Stock Recap Show, where every Friday we recap all the major news and the technical chart patterns from all the major Fang stocks. This week, we had earnings from Tesla. We had earnings from Netflix, and most of these stocks slid down after weeks and weeks and months of heading upward. Is this the trend that we're heading into next week? Are we going to get excellent pullback buying opportunities for these stocks? I will show you the areas that we are looking for as it relates to pullbacks in the coming weeks ahead in the technical segment of the show, but we better not waste any more time and kick things off like we always do with Meta Platforms. Start of the week at 308. Slid down by over 4.5% to finish the week close to $295 per share. Meta reports their earnings just 5 days from now on July 26. Qualcomm and Meta announced a deal to bring large language models to phones and PCs. This is when large language models really take that next leap, is when they come to the phone. Once the large language models get on your phone and they are studying, maybe like, let's say you post a lot on Instagram and you're getting a lot of likes on a certain post. Well, a large language model on your phone might be able to figure out what that post is, what was special about it, and then maybe create 3 or 4 more of them for you on your phone. And so there's going to be just a lot of applications that are coming from large language models being able to run natively on a phone. And the fact that Meta and Qualcomm are teaming up on this, probably a great combination, and really look forward to seeing what happens next from Meta as it relates to large language models. They're doing a lot of interesting things. It's probably something we'll talk about in 5 days from now when they report their earnings. As the case with a lot of these companies, the fact that they report their earnings in just a couple of days means not a lot of news out of Meta. Moving on to Apple. Start of the week at 193, slid down just a little bit. Finished the week closer to $192 per share. Apple has got another week before they report their earnings. We'll get those on August 3rd. ESPN said to be in talks with the NBA, NFL over strategic partnerships. It certainly looks like Disney wants to start breaking off of their businesses, or at least get some partners in as it relates to ESPN, as the sports right content is getting so expensive. So one way to do that is go to the rights owners like the NBA and the NFL and maybe bring ESPN an asset that those leagues own. Now, the leagues have done that in the past. Typically, it's with like their own proprietary network like NBA TV or like NFL Network or something like that. Or certainly when you look at like Sunday Ticket or the League Pass, they tend to own that end to end. So it complicates the situation. If the NBA or the NFL takes a position in ESPN, TNT has a big deal with the NBA, and maybe you're trying to negotiate against NBC or somebody else that's trying to bid on those rights. Well, if you own a portion of one of those networks, it maybe weakens your negotiating stance, and these leagues make the vast majority of their money off these TV deals. So I'm not 100% sure one of these leagues will step up and bid and buy ESPN or take a small equity stake in it and bail Disney out. Who I think is going to bail Disney out happens to be one of the world's richest companies, the topic of this segment. That happens to be Apple. I wrote about this on my newsletter, link in the description down below. You can always head to the website, click on the Bleeding Edge newsletter, and you'll find my writings on a near daily basis here. You can also subscribe via email. So what I decided to do was I wrote an article just the other day called Deal of the Century, essentially outlining the case for Apple to purchase at least a portion of Disney's entertainment assets, including ESPN. Apple is said to have issues with larger screens for their iPhone 15 Pro and Pro Max. These are the phones that are being anticipated to be released later this year, likely sometime in September, right before that holiday shopping season. LG Display is one of the suppliers for this, and they are trying to make the screen size the same size, but shrink the bezels to create a slightly larger screen with less black space around the edge. We'll see if they are able to pull that off. Apple and others may pull iMessage and FaceTime from the UK if a controversial security bill, we'll put security bill in quotations because it looks like the UK wants to be able to scan your encrypted messages on the iMessage and other message apps out there. The tech stock's kind of standing in the way of freedom of speech, if you will, I guess, and we'll see where that one ends up going. Apple gained earlier this week as it is said to have built a ChatGPT style bot for internal employees. It looks like this bot is only available to certain employees in Apple, and it has been inside of the company since 2022. I thought what was interesting, it was built on Google's JAX models, and it runs on Google's cloud, its own infrastructure, so its own servers, probably really proprietary data is probably staying simply on Apple servers, but they also use Amazon Web Services as well. That's probably bullish for both of those cloud providers, because if Apple is using you to launch an internal large language model, there's probably hundreds, if not thousands, of other companies that are going to be doing this in the coming years ahead. Moving on to Amazon. Start of the week at, we'll call that 135, slid down over 3.6% to finish the week at 130 on the dot. Amazon earnings just 6 days from now on July 27th. Very much anticipating that. Amazon plans $120 million satellite processing site for internet. Think of this as like Starlink, but brought to you by Amazon. They are partnering with a Boeing and Lockheed joint venture with Jeff Bezos' Blue Origin as well, helping get those satellites into space. It looks like this is something that is still relatively far out. You're looking at maybe 3 or 4 years before this service becomes operational. We'll see how much of a lead Starlink already has in the satellite internet space and how much more of a lead they're able to achieve over the next couple of years. And again, because Amazon reports their earnings soon, not a ton of news out of the company. Moving on to Netflix, start of the week at 451. And yeah, that big little drop off a cliff, that was when the company reported earnings earlier this week. Stock ended the week down over 5.3% to finish the week at $427.50. Netflix on their earnings call really talked about the paid sharing is really their key to ramping up their revenues through 2023. And I totally buy this, right? Okay, so there's a lot of people that have a Netflix subscription, then you send your password to your brother or your mom or your cousin or your neighbor or whoever it might be, or maybe you have kids that are borrowing it as well. And so I understand this is the growth thesis and this is interesting, at least in the shorter term. And that's where my concern with Netflix happens to be is, okay, if you were just going to get the moochers to start paying, what's the next leg? Okay, because the moochers are going to figure something out. They're going to figure out a workaround, or they're going to sign up relatively short order. And in a quarter or two, are we going to be sitting here with Netflix where they're going to have low to no growth on their sub side? And what is that going to do to the stock? And what is it going to do to the valuation? Which, look at 37 times forward, it's not as wildly expensive as this stock used to be in the past. But compared to other traditional media companies that are looking around for investments and maybe offloading assets, well, it's wildly expensive considering the sector it trades in. And so that's my question with Netflix is, what's next? After you get the moochers to start paying, what's the next move for this company to drive subscriber growth? Particularly in the fact that you have Hollywood studios and the actors on strike. In fact, you have the writers and the actors on strike, I believe for the first time in over 63 years. There's been times when one or the other has struck. Now you have both of them. And so you essentially have a shutdown in new production in Hollywood when it relates to TV and movies. And so look, the longer this goes on, now Netflix does have some quote reality-based programming, and that's something that can easily be rolled out, maybe not easily, but that can be rolled out if this strike prolongs itself. But movie goers and long form kind of series TV, and certainly the popular series on Netflix, they're certainly going to be having actors and writers inside of this union. So obviously the longer it plays out, the more pressure it's probably going to put on content assets over at Netflix. So moving on to NVIDIA, start of the week at 461. I haven't seen this in a while. NVIDIA stock down about 4% on the week to finish the week at 443 and some change. Now, NVIDIA does buck the trend here. We won't get their earnings for about a month from now when they report August 23rd. Now, AMD's CEO said she might consider foundries besides Taiwan Semiconductor. I think this headline is a little misleading. She did say that they were, quote, considering other manufacturing capabilities. However, she really more or less cited the fact that maybe taking some of their production outside of the Taiwan-based Taiwan semiconductor foundries and moving to the ones that they're developing in Europe and certainly out here in the United States. But also, this is just simply a negotiating ploy, okay? She's got one customer or one fab that has complete control over the fabrication of her products and her company's products. Well, this is one way to negotiate essentially through press releases. NVIDIA should reinvigorate AI trade. That's according to Barclays. The analyst saying that NVIDIA is likely to have another beat, a significant beat, and raised quarter. Now, that obviously won't come until the end of August or right around 8/23. So August 23rd, we'll get NVIDIA's quarter. And I actually agree with that. I don't always line up and agree with analysts. I actually agree with this. I think NVIDIA's quarter will be good. I think they guided to about $11 billion in revenue. I think they'll be in that ballpark, plus or minus a little bit. I actually think it's that subsequent guidance that is going to blow people out of the water again, just based on all the commentary. Elon Musk was on the Tesla conference call this week, essentially stroking NVIDIA. Everything that I listen to just shows me that this company has an exponential amount of demand right now, and that certainly would likely mean that the company will have extraordinary guidance when it reports in a couple of weeks. NVIDIA nears a deal for a stake in Lambda Labs. Now, this is interesting. So you've got the rival CoreWeave and you've got Lambda, essentially what these guys are doing. And if you're on Twitter and I see ads for these companies, they're essentially creating like an NVIDIA GPU cloud where think of it like the AWS or Google Cloud. And so NVIDIA is actually making equity stakes, equity investments, what they're doing is they're actually giving these companies priority shipments of NVIDIA GPUs over and above what they're giving to Amazon and Microsoft and other companies out there. NVIDIA is actually taking care of that kind of smaller upstart cloud service. And I actually think this is really good for the cloud business. It's been dominated by one name, and then you finally had Google and Microsoft, and certainly you have Oracle and IBM to a lesser degree out there. The more and more players in there, it will help pricing and help access. And so the fact that NVIDIA is getting into that business through equity stakes, and I think it's something that they'll probably end up rolling into the company at some point in a more larger fashion, get that recurring business model from a cloud service. That's very exciting as it relates to NVIDIA, which, look, has a rather rich valuation going forward. But when we talk about this company, the fact that they'll likely beat and raise again in the next quarter, and then you have to start looking 2, 3, 4 quarters out. Well, yeah, the forward PE is 57, but it's based on forward estimates that are likely probably going to go up. Moving on to Google, started the week at 126. This one slid down quite a bit, over 5.2%. Finished the week near $120 per share. Google reports their earnings just 4 days from now on July 25th. Now, the AI race, as you know, is in full swing, and Google is going into, quote, overdrive mode to power its Gemini project, which aims to compete with GPT-4 and the things that are going on over at Microsoft. Inside of this news article, the New York Times reports that, quote, Google co-founder Sergey Brin is now in the Google offices 3 to 4 days per week. Imagine selling Google being worth it might be worth hundreds of billions of dollars. I'm not exactly sure. And then showing up at the office 4 days a week to develop the next large language artificial intelligence systems that they hope to challenge GPT-4. Tell you what, Sergey Brin obviously has an illustrious past inside of Silicon Valley and obviously someone that is well respected. The fact that he is clocking in 3 to 4 days per week at the Google offices, considering he's not doing it for the money, probably a good sign for Google. And just broadly as it relates to Google, they're going to have some challenges, but this is a company that has all the resources and all the data. If they miss the AI, similar to like how Microsoft missed cell phones or, like Yahoo missed kind of, the trend into more deeper search and search advertising, Google, that'd be one of the biggest follies in the history of Silicon Valley. Now, Google pitches AI tool to news publishers to assist journalists. So essentially, if you are a journalist, look, a lot of the part of the job with a journalist might be like fact checking. So you have a fact or somebody told you a fact, or you want to write an article and you want a fact to support what you were saying. Well, an AI tool to be able to do that is actually kind of interesting, because typically you're probably digging through Google, you're reading and all that type of thing. Well, if the AI tool can deliver that to you faster, it means your story's probably going to get out faster. It's going to maybe even increase the number of stories that you can post, maybe increase the accuracy, the number of facts you can layer in, the amount of research that you can actually do. And so these type of tools, they're not really aimed to take journalist jobs. I actually think journalist jobs are not only safe, I actually think they get more valuable in the area of AI as human data. People are going to find that actually human data, human created data, is going to become more valuable, not less valuable in the era of AI. And a lot of the AI is going to do, it's going to create an augmentation or a tool to help you do your job better and faster. Moving on to Microsoft, start of the week at 346, just down fractionally to finish the week at about 343 and some change. Microsoft reports their earnings on the same day, on the very same day as Google, and be highly anticipated day on the 25th, just 4 days from now. Now, Microsoft has got a lot of things going on. We'll get to the news stories here in a second, but obviously Microsoft releases their guidance inside of their conference call, so that is highly anticipated once that hits. Now, Microsoft hits an all-time high after unveiling pricing for its AI tool called Copilot. This is really, this is the story, I think, not only of this week, this is the story of the next 12 to 24 months when it comes to software. So obviously, if you are an enterprise and you want to have Microsoft, well, they're charging for that. And they charge you about $36 per user per month. So you can imagine if you have an enterprise of 1,000 employees or 5,000 or whatever it is, that's a total that can stack up very, very quickly. And obviously, as you know, as we've gone through Microsoft earnings videos here on the channel, well, that's at an incredible gross margin. Well, what they decided to do was, if you want those AI capabilities, and I think so many enterprises are going to add this because it's going to make every employee just a little bit better. They're not going to have to answer every single email. They're not going to have to type out every single email. They're not going to have to listen so intently to a Microsoft Teams call. It's going to summarize it for you. It's going to make any employee just a little bit better. And at just $30 per month or less than $1 per day, this almost sounds like a sales pitch from Microsoft. It seems like a no-brainer to me. And Microsoft is just going to be able to, you don't see this in software very often, to where you can layer on just a few services, okay? This isn't a giant overhaul of Office. It's essentially just layering on AI on top of Microsoft Office, and the company is going to be able to raise the price 83%, and I think they're going to have a line out the door as it relates to that, and in a couple of months, we are going to see this show up on Microsoft's earnings statement. And I don't think it's priced in the stock right now. Microsoft said to be delivering improved combat goggles at the end of the month to the great U.S. Army here in the great United States of America. This is something that has been in the work for quite a while. The deal is worth nearly $21 billion, which, look, even to a $2.5 trillion company is, a little bit more than a rounding error. This is to provide those HoloLens technology to augment the vision of our great troops in the U.S. Army for about 120,000 headsets. They're going to be doing thorough testing on this before they obviously put it on the great troops in the actual battlefield. Microsoft, Activision extend the deal for their deadline to complete that deal, if you will, until October 18th, as we saw a lot of news flow this week as the FTC said to be pausing their trial over the Microsoft Activision merger. As we talked about last week, the FTC basically got slapped around by the mega rich and mega capable lawyers over at Microsoft and Activision. Got to give them a pat on the back, and I'm sure that bill will be showing up in the operating statement when we look at Microsoft on the 25th of next week. And my guess is you'll see a series of concessions. One of those that we saw this week is Microsoft in a pact to keep, quote, Call of Duty, which is the popular game that Activision Blizzard makes on the Sony PlayStation. And this only makes a lot of sense. If you look at the margins on Xbox, it's not great, okay? And a lot of times they're selling the actual consoles at either a very thin margin or at a loss to get the software in people's hands. And look, there's going to be a lot of digital sales of Call of Duty. There's a lot of in-game purchases and things like that, which will just simply benefit Microsoft in the longer term rather than making that game an exclusive under their own hardware franchise. Moving on to Tesla. Start the week at 290 and some change. Boom, big down week, over 10.5% down on Tesla. Finished the week at 260. We talked about this a lot on the Tesla video, so we won't go deep on Netflix or Tesla. We already have videos of those. Check the feed of the channel. You'll definitely want to watch those. I tried to make them as short as possible and concise as possible, so you'll get a lot of information about Tesla and their earnings in just 12 to 15 minutes. Now, the company, again, slid 10% after their earnings disappoint, and that is taking down a lot of other EV stocks. But what we have to remember about Tesla is despite being down 10% this week, the stock is up 140% year to date. And even over the last year, it's performed okay. It's up about 5%. The conference call of Tesla was absolutely worth listening to, and I will absolutely be pulling some of Elon Musk's quotes and be adding it to different things that we decide to do over here at Brownstone Research. It was a fascinating conference call. Elon Musk, far less polished and more off-the-cuff answers than most CEOs tend to give, but they did disclose that they are going to likely license full self-driving software to other automakers. In fact, they're in talks with one in particular at the current time. Now, moving over to the technical segment of the show, we'll connect to our chart patterns here. The S&P 500 is looking pretty good. As we go through these tech stocks, there's been some impulsive candles down, but the breadth of the market is spreading out. If you look at like financials this week, maybe some other kind of blue chip non-tech stuff did okay this week. And so the S&P 500 actually held up. It is still, really since May, we've been kind of in a vertical trend on the S&P 500. This is obviously great in the short term. In the long run, we should have a relatively healthy pullback. It might not happen all at once. It'd be nice if the market's traded sideways for a while, allowed for some consolidation, allowed for people to accumulate stocks. But we could get a major pullback, but just keep in mind, considering how far we've rallied off the lows, really all the way back here in March, and if you want to go all the way back to October, there's a lot of technical momentum in these markets, to say the least. Now, moving over to Meta, here's some impulsive candles as I talked about. Typically, when you look at a stock that is ready to roll over, you start seeing these kind of big red candles. We saw two big red candles show up over at Meta this week. Now, it's not completely alarming, and it's not to say that this trend can't continue because, again, the company reports their earnings just 5 days from now. I don't blame anybody that was maybe in a shorter term trade or just simply has experienced a lot of this growth in Meta with wanting to step out of the way today ahead of the company's earnings. Certainly seems like a logical thing. If you do get pullbacks in Meta, this purple line seems ripe, pull you down to an area of consolidation down here to about 245. A move higher after earnings for Meta would take you easily into the 340s. Again, not necessarily on the day of earnings, but over the subsequent weeks, a good report, good outlook will take you to the 340s and eventually retesting highs up in the 380s. Moving over to Apple. Again, this company reports their earnings about a week from now on August 3rd, or excuse me, a little over a week, as we're probably closer to 2 weeks out on this company. Still in this trend, pullbacks to the previous highs down here in kind of the 180 area. If Apple lays a brick and has maybe a little bit softer guidance, I don't know what Apple is going to do on their earnings to wow people, because we saw Taiwan Semi report this week. Okay, you still have a lot of PC weakness. They're not going to have great PC sales. They're not going to have great iPad sales as well over at Apple. The iPhone is set for a refresh here in just a couple of months. I don't know what they're going to do on that conference call to keep the stock at these highs, but I'm sure Tim Cook makes the big bucks and he might figure something out. Moving over to Amazon, this stock looking pretty good, still working its way up. We've seen a little bit of hesitation over just the past couple of days. Again, similar to Meta, maybe just some people in shorter term positions or wanting to take some profits the week before the company reports their earnings. That is just 6 days from now on July 27th. A bullish report, particularly when it comes to guidance. And with Amazon, it does come down to profits and cash flow. If this company's cost-cutting measures do actually show up in the most recent quarter, and maybe they were able to squeeze some margin out of that retail business, I think everybody's comfortable with the fact that AWS is kind of in maybe a trough, if you will, in terms of its growth rate. And so I think Amazon's levers to really shoot this stock higher is actually probably on the retail side. Can they actually like break even in Europe and overseas? Can they actually squeeze out an operating profit here in North America? That certainly would do wonders for cash flow. Well, if they do, the stock probably has upside back up to resistance up here at 145. Pullbacks with Amazon, I actually think could be relatively steep, simply because this company could actually disappoint, but a steep pullback would essentially just flatten out an uptrend that it looks like to me is really well defined. These large pullbacks in pretty much all of these stocks, I think, can be comfortably bought. Now, speaking of pullbacks, you had pretty sizable pullback in Netflix this week. However, it is still making a series of beautiful higher highs, higher lows, a pullback to support somewhere in that, we'll just call it like 380 to 390 area. That could be bought in the shorter term if you feel like it, if you just got to have Netflix. Wouldn't do a full allocation. Like if you wanted 10 shares of Netflix, that's an area where you can buy like 2 or 3 and just wait for the bounce. You get a bounce higher and a move higher. I think you could add to that position, because if this uptrend continues, you should make higher highs up north of $500 on this one in the event of a pullback. Now, speaking of pullbacks, no sign of it yet for NVIDIA. Still at the top of the channel. I suppose that NVIDIA could just be out of this channel altogether. It's rare that that actually happens. Possible we could just get out of this channel and kind of start a new one. I still think we pull back into this channel, depending on how fast NVIDIA does that. It would take you into the 300s, 320, 325, 350 on this stock. I know it seems like a mile away, but the stock has moved a mile off of the lows. And again, complicating the situation a little bit is NVIDIA doesn't report their earnings until August 23rd. I actually think weakness in the broader markets would give you an opportunity with NVIDIA, as profit taking likely would happen. You've got a gap to fill back to the 320 area. Those would be areas where I think you could probably add to a position or start one. Moving on to Google, since he created another lower high. I mean, this is a we're talking about a micro trend just in the last, call it 30 days. The stock is making a series of lower highs, lower lows, not always the start of a new topping pattern or a large pullback. But again, complicating the situation, Google reports their earnings on the 25th. I don't anticipate their revenue growth or their profits to really blow the doors off of anybody. And so it's really going to be based on what they say. And look, you have, Sergey Brin clocking into the Google office. Unless he shows up on the conference call, with all due respect to Sundar Pichai, I don't have a lot of confidence in him from just a kind of speaking perspective. I've got way more confidence in the Microsoft CEO. So we could have a pullback in Google, and I think they probably can be bought underneath like the 115 areas when it gets exciting. Down here at about 107, further back to 100 is, I would suppose, I hate using this term, but that's more or less kind of a back the truck up moment when it comes to Google. Now, speaking of, backing up a truck, this stock has been backing it up a hill for many, many months now. Completed the absolutely beautiful V-shaped recovery, which, look, it's improbable, but it actually happened. Topped out once it got over the previous all-time highs, and now investors are waiting for earnings just 4 days from now on Microsoft on July 25th. Pullbacks on Microsoft, and look, when you have a V-shaped recovery, the pullbacks can actually be really significant. Like you could pull back to I'm not saying this is what is going to happen, but you could theoretically pull back to, we'll just say 270, and you could do it in short order and then make another higher high and really just be confirming just a kind of a ho-hum uptrend with like 30 or 40% swings in them. I don't know if that'll happen. I didn't think, I swear, I did not think that a V-shaped recovery is possible. And if you look at the longer trend with Microsoft that has really been in place. I mean, you can extend this purple line back a long time. I mean, we're talking north of a decade. A pullback to trend, not necessarily in the shorter term, but if it takes a while, couple of months, pullback south of 300 it would actually be very normal for this stock, very healthy, and should likely be bought based on the technicals, but I think more importantly with Microsoft, the fundamentals as well. Now, finally, the pullback of the week was Tesla. Stock was down over 10%, big red candles showing up, but look, there's actually nothing to be overly concerned about from a technical perspective. Let's flash back to like a couple of weeks ago. This was the chart we were looking at with Tesla. We had been making lower highs, lower lows really since November of 2021. The stock was in a downtrend for not quite 2 years. More recently, though, we finally broke up above this purple line. The line is purple for maybe not a good reason, but it is purple so we can identify it. Once you broke above that, you could technically delete this line, but I leave the purple line in because technically back testing the purple line is something that you see a lot in technical patterns. A back test on Tesla in short order would take you just south of about 210 on this stock. It would also line up with our gold line, which looks like kind of the start of an uptrend. The area at 210 is well supported by other support that comes in over here. I mean, a 210 moment on Tesla is, considering how volatile the stock is, it's a little bit different than Microsoft. They're not buying back the shares at Tesla. They're not paying a dividend. They don't have this like gross margin expansion story. In fact, it's kind of a contraction story, but that is a very interesting moment. I'll be sure to point it out. I think it's actually highly probable we do that because a bounce from there would likely create another higher high, and who knows how high the next higher high is, but it's likely north of $310 per share. You would go from 210 to 310, which obviously would be a pretty good gain in the short or even the somewhat longer term. Folks, buckle up your seatbelts. We'll be back next week with Meta earnings on the 26th. On the 27th, we'll have Amazon. But before all that, just 4 days from now, on the 25th, we will have not just Google, but we'll have the arch rival Microsoft on the exact same day on July 25th. I'm so excited about all of that. I can't wait to bring those videos to you. We will see you again very soon next week. But until then, have a safe and fun weekend and good luck with your investments.